Hello everyone. So on this video, I'll be sharing about Alibaba. Yeah, so I won't be sharing about their latest quarterly results, of course. What I'll be sharing here is their overall business trajectory. Yeah, the overall business, how they will be doing in the future. I'll be sharing you the good and the bad and whether these facts here will make or break Alibaba's business. All right, so without further ado, let's get started. So they have just released their March quarter result, which is their quarter 4 2024. Yeah, so they have managed to grow at 8%, right? 8% in the year, total whole year of 2024. So the thing that I want to highlight to you guys is that their Taobao and Tmall group, all right, is growing modestly. Yeah, but the one to take note is this very fast growth, which is their Alibaba International Digital Commerce Group, or AIDC, AIDC group, which managed to grow at 46%, which is very good. It is a very considered high growth, right? And of course, there are China logistics business, which is growing at 28%. All right. So you see, as shareholders, right, it's good to see that there are different business segments growing very fast, but we need to see at a very different angle here. So that's why I have made a calculation for you guys. For a company to grow, all right, their main business, which contributes the largest percentage of the revenue, must grow fast also. Yeah, because you see, the main business, as I already calculated for you, percentage of their revenue, right? Taobao and the Tmall group are the major contributor, which is around 42.8% of the revenue. Yeah. So although, yes, all right, their AIDC business is growing very fast, but if we calculated it like that, all right, it's actually only contribute 10.2%. All right, so even it grows fast, but it needs to move the needle. All right, it needs to move the needle of the business to contribute significant growth towards their overall revenue. Yeah, so but nonetheless, it's good to see that both AIDC and the China business are growing very fast. So let's see. Okay, let's see, will they continue to maintain this growth rate in the future? Hopefully, it will hit enough volume and contribute, able to contribute, a significant growth factor for their overall revenue. Yeah. So to assess this business, all right, I will assess both their Taobao and Tmall group and their AIDC business. So for Alibaba, their business definitely is growing. As you can see from this trajectory, their total revenues, they have been growing every single year. But the one thing that we investors need to take note is their growth rate. Okay, they have been growing quite well, in 2015 to 2018. Yeah, 45%, 30, 56, 58%, which is very, very, very high. But the thing is, their trend, start to, I wouldn't say not improved already, but somehow show a bit of a decelerating. You know why? Because in 2019, they dropped to 50%, then quite a massive drop to 35%. And then, of course, aided by the COVID lockdown and stuff, people tend to shop more, which boosts up their growth, to around 37, 38%. But then again, on 2021 to 2022, after a year, there's a massive drop to 18%, then only close to 2%, and then go up to 8% again. Yeah, so we need to dig further. Okay, what's really happening with Alibaba throughout these years, and whether these factors here is still lingering, okay, and whether how it will affect into the future business. Yeah, so I managed to dig out the main factor why Alibaba's growth, you can see above here, starts to decelerate, from 50% go down to almost 2% and 8% here. Mainly, I think it's because they are competitors. In China market, it's very big, and there are a lot of competitors. And I managed to dig out. It seems that this company PDD called Pinduoduo, right? You can see that it's quite accurate you see, because since 2018, 2019, you can see 2018, 2019, that's when the growth rate here start to slow down. But Pinduoduo's market share started to grow bigger and bigger. You can see from 2015, right? This is their market share, the red color one. Then it started to grow bigger and bigger, together with the others, online shopping companies. So I want to confirm whether this chart, is it accurate or not. So I dig out further, and it seems the trend is quite accurate, because you see, Pinduoduo here, which is this color, the darker blue one, right? You can see their market share, right, is around this big only. Then at the end of the day, they slowly grow bigger and bigger. Yeah, the others, you can see here, from here is the others, right? It seems that the others is Douyin and Kuaishou. Douyin, is TikTok, okay, and Kuaishou is also another online platform, right? So I didn't manage to dig Douyin, okay, because as you all know, TikTok is a private company, so I cannot see their, business, I don't know what's really happening, but it seems that they have been taking a lot of market share from both, not only Alibaba, but JD also. Okay, JD.com, yeah, they've been taking market share. So these three here are the new entrants, okay, and they have been very aggressive and been taking market share from both Alibaba and JD lah. Most notable from Alibaba. Yeah, you can see from this very high, in 2019, a 60%, all right, and then continue to keep on going down until around 40% here. Yeah. Then I find another chart again, all right, to see whether this trend is real, and it seems it's true. All right, because from 2022, you can see this a lighter blue, lighter color, and the darker color is 2022. Alibaba lost the market share. Okay, they lost the market share. They got a shorter already here. JD.com also, but Pinduoduo, okay, grow this one, the market share grow bigger. Together with Douyin also and Kuaishou also. So it seems to me that that what's happening with Alibaba in China, all right, is that they face stiff competition. Okay, they face stiff competition. So these are the facts. And these three companies, Pinduoduo, Douyin, and Kuaishou, are taking market share from JD.com and Alibaba. Yeah, so these are the facts. Then I go and dig out further, and it seems, all right, that the rivalry, okay, for Alibaba is actually a lot on Pinduoduo. Okay, Pinduoduo, of course, okay, they have been, a listed company, of course, so everybody knows them. Yeah, and you can see the news here is lean a lot towards, talking about Pinduoduo taking market share from Alibaba. They have been overtaken them and stuff. So I decided to take a closer look, okay, on Pinduoduo here. So of course, if you are a shareholder, all right, previously on this company, Pinduoduo, really congratulations to you lah. Yeah, as you all know, in 2021 to 2022, a lot of the stocks all went down. Okay, it was a crash at the time. Okay, but okay, despite the drop for maybe like less than 1 year, the stock recovered immediately. So investors don't need to wait, another 2 years, for the stock to recover or what. But Pinduoduo managed to continue to go up from the lowest point. It went up 355%. Yeah. So is this share price went up here? Is it a hype? Is it a fake one? Or is it supported by fundamentals? So I go and take a look, and quite amazing, okay, with this company, because you can see the red color is their total revenue growing tremendously fast. Really quite amazing. Yeah. And then they are not a loss-making company. They're not your typical, tech company that keep on burning cash. Since 2021, they have been profitable, showing positive numbers already in both the operating income and the net income. And then they've been growing for the past 3 years. Yeah. So let's look at their revenue growth. Okay. So in order to see, whether, again, to confirm the facts, is it true that Pinduoduo is taking market share, from other online shopping companies? Okay, for example, this Alibaba. So we can see here, the blue color is Baba. Okay, 50%, 35, 40, and then in 2022 and 2023 have been dropping to 18% and then to 2% only. But we look at Pinduoduo, their growth rate is way higher than Alibaba. 97%, 57%, 39%, which is again higher. And while Alibaba is dropping to 2%, amazingly enough, Pinduoduo grow close to 90%. So you can say that Alibaba was starting at a very huge number in revenue. That's why their growth rate couldn't, show as high. Fair enough. But if you have been growing consistently, all right, for a company, right, you must also show a consistent double-digit growth. Okay, let's say you are very big enough, but you can still continue to grow. All right, let's say 10% or 15%. It means to tell me that, okay, your business is also growing. But it seems to me that, Pinduoduo has been growing very fast. And while Alibaba's revenue growth drops, but Pinduoduo's revenue accelerated. So it can roughly tell me that, yes, Pinduoduo is grabbing market share already, okay, from both JD and also from Alibaba. Yeah. And the gross profit margin was quite amazing. Okay, when I check it, Pinduoduo, it managed to, maintain the gross profit margin of 70%. 77, 66, 75, and 63, which is almost, you can say, double of Alibaba's gross profit margin. So when a company has a much higher gross profit margin, they can do more things. Right? Because they can retain more cash and they can do more things. Operating profit margin during the early years, all right, I believe that they also burn cash. They spend a lot of sales and marketing and stuff. That's why they are negative. But the good thing is this, Pinduoduo, every single year, their numbers is on the right trajectory. They are going up, improving every single year. And since 2022, they have been maintaining a positive number already. Their operating profit margin maintaining at 23%, which is double of Alibaba's. Whereas you can see Alibaba have been dropping their operating profit margin here. Okay, but instead, Pinduoduo improve, keep on going up. Yeah. Net profit margin, the same thing. Okay, net profit margin. Yeah. So Alibaba has been dropping, all right, from their highs of 30%, down now becomes 7 and 8%. Whereas Pinduoduo go up, and maintain a net profit margin of 24% and 24% again, which is literally double or triple, the margin. Okay, so it shows to me clearly that maybe Pinduoduo is doing something right and they have been taking market share away okay, from Alibaba and JD.com. Yeah, so this is the facts and what's happening on their China business. Okay, Taobao and Tmall Group. Yeah, so the next thing we need to take note is their AIDC business. Yeah, because they have been growing very fast, and in order for Alibaba to grow, they need to rely on their international business, because this is the potential one, because they have been growing very fast also. All right, so we need to take a look, how's their international business looks like. Okay, so I found this graph. Right, it's good to see that they have already showed to us, the overall online e-commerce companies in Southeast Asia. Yeah, the international business is definitely around Southeast Asia, because these are the most potential ones. Okay, Southeast Asia, the e-commerce market is growing. Okay, it's big enough for everyone. It's still big enough for everyone. So let's focus on these few countries. So we can see, Lazada is, of course, yes, you all belong to Alibaba, right? Lazada and Shopee seems to be the main contenders here. All right, you can see, let's just start with Malaysia. Okay, let's start with Malaysia. The gross merchandise value, because they are comparing the percentage of the total gross GMV, what we call. So Shopee has 78%, Lazada around 20%. Indonesia also Shopee, Lazada is at 10%. Singapore, Shopee at 53, Lazada 35. Thailand, Shopee 56, Lazada 40. Vietnam at 63% for Shopee, Lazada at 23%. Okay, so these are the facts and the images, okay, that I found, okay, on the internet while I researched, and these are the numbers. So is it true or not? So I go and dig further. So I use what we call Google Trends. Now you guys can also use this. Okay, use this to research, to see which, the e-commerce company or any companies are the ones that are more popular, right? Because as more people want to use, let's say for example, they want to use Shopee, all right? More people, of course, will search for the word Shopee. Right? There's more interest. So the more numbers here, the higher the number, that means the higher the interest. All right. So let's start with Malaysia. So you can see for Malaysia, I put for the past 5 years, what is the interest? What's the interest? So the blue color one is Shopee. The red color one is Lazada. I only compare these two. Why? Because you can see from this chart, okay, is that the main contender here is, Shopee and Lazada. Yeah. So Malaysia, Shopee scores 38, Lazada at 8. Singapore, same thing, the trend. Yeah. The blue color is Shopee at 65. Lazada is at 20. Indonesia. Now, Indonesia is the only country. Shopee number 1, Tokopedia number 2, Lazada is at number 3. So the interest, I can see is that Shopee still maintains the number 1. Tokopedia, which is still at the lower side, but still higher than Lazada here. All right, you can see 50. Then Lazada 7 only, Tokopedia is 16. Yeah. Thailand also higher. Shopee has 76, Lazada at 25. Now you can see. Oh yeah, I forgot to mention this. So what is this beside here? Is I again go to another website where they provide me data on the app performance. All right, app performance, and I use shopping category. Yeah, so this is for Malaysia. And true enough, okay, I think everything we check, okay, it seems they are consistent. So I double confirm and then double confirm again. Yeah, so you can see that's why. Okay, Shopee and Lazada here, Shopee, Lazada, Shopee, Tokopedia, and then Lazada. Yeah, this is for Indonesia. Then Thailand, same thing, Shopee, Lazada. Philippines, Shopee score 33, Lazada at 14. And the same thing again at this app, Shopee and then Lazada. And then lastly, Vietnam. Vietnam, quite a huge lead. Okay, I'm surprised that this company Shopee has a very huge lead in Vietnam. Okay, 71 numbers. That means a lot of the Vietnam people there, they have a very high interest. They're searching for the word Shopee there, right? And then the number 2 and number 3 is a very huge distance. Lazada score 8, and there's another e-commerce website called Chotot here, okay, in Vietnam, right? Scored 9. So around the same as Lazada. Yeah. So based on this point, the facts here, I would say that, Lazada has a lot of work to do. Still has a lot of work to do in our international business. They can do better. The 46% growth is nothing to say bad things about it, because you must say to be able to grow 46% is truly remarkable. right? And Southeast Asia is a very, very big market, still under-penetrated, to be honest. Yeah. So one thing to take note, all right, is their international business. They need to do something in order to grow faster and continue to take market share from the other e-commerce companies. Yeah. But not all is, quite negative or bad about Alibaba. Okay. Because one thing I like about this company, Alibaba here, is that they have a very solid balance sheet. Very, very solid. Okay. You can see this is their asset. The asset here is very high. Liabilities is the blue color one, is very low. Has a lot of cash. Yeah, has a lot of cash here. And then their current ratio at 1.8, quick ratio at 1.4. So this company here is loaded with cash, has a lot of assets, very liquid, and it's impossible for them to go bankrupt. Yeah. So with this, strong balance sheet and a lot of cash here, they can do a lot of things. They can do a lot of things for the business. And not only that, they are a cash generating machine. They are a cash generating machine, because you cannot deny Alibaba is still the #1 e-commerce company in China. Okay, they are still the #1. Okay, a lot of people are still using Alibaba's app, and then a lot of people are still relying on their app, okay, to run their business. Yeah, so that's why they can continue to generate a lot of cash here. So with this cash, they must right now, start to implement any further strategies, to improve the business, because they have more cash than the other competitors here. They have been generating that. So the management must, right now, make use of the cash, strategize it properly, in order to stop losing market share and instead start to, win over the customers from their competitors. Yeah. So the good thing when they have a lot of cash is that they can do share buyback. Now, when a company do share buyback, it's a very good thing for the shareholders. Okay, it's another way to reward shareholders beside dividends. So on April 2nd, they announced that they'll do a share buyback program or a share repurchase program here, okay, which is actually a lot, 4.8 billion. 4.8 billion. Yeah. So not only that, let me tell you this, Alibaba has actually been buying back their shares since 2021 and 2022. Here, you can see this is the share count, total shares outstanding. Previously, the total shares has been increasing because, they have to reward employees with shares. But right now, because they have a lot of cash, and their shares are at all-time low, so it's a very good use of the money. Very good use of the money to start buying back shares when it's really very cheap right now. So you can see that the share number is going lower and lower. When it goes lower and lower, what happens? Very simple. This is the revenue per share. That means the share value of Alibaba. Yeah. So you can see the share value of Alibaba has been increasing every single year. Very good, because when I own the shares of Alibaba, the longer I hold it, the more valuable the share is. All right. Now, this is the effect of having a share buyback. You see, look at it carefully. Okay, the dark line here is the revenue per share growth percentage. While the orange one is the revenue itself, the revenue's growth rate. Yeah. So you can see that, previous years, okay, in 2021, okay, before, they start to do the repurchase, right? Okay. The growth rate of the revenue is always slightly higher than the revenue per share growth. Obviously, because they have been keep on issuing new shares. They are growing also, but they are growing slower than the revenue. Okay. Then when 2022 comes, you can start to see that the pattern change already. Why? Because they have been buying back their shares. The shares is getting lower. This has a very positive effect on the shares of Alibaba. That is when their share value, the growth, will now be higher than the revenue growth. We all know in 2023, Alibaba grew at 2% or 1.8% only. But the revenue per share, the growth percentage grew at 4.6%. And in 2024, they grew 8.3%, but the share grew at 12.6%. So they are accelerating growth in terms of the share, growth. So this is very, very good. So we do hope, all right, that by continuously doing this buying back, provided, of course, Baba can generate cash, the share will get more and more valuable, and hopefully in the future, the share price will continue to go up. All right. So I'll be sharing, a few other factors, right, that, Alibaba shareholders need to take note on what will make their share price go up in the future. Yeah, so if you want to know this, okay, please do click subscribe, okay, and follow my YouTube channel, okay, because I'll be releasing this video in the next few days. Yeah, if you want to see how Alibaba, what is the potential, what are the factors that will push up the price, I'll be sharing this video in the next few days. All right. So this is from me about Alibaba. And then let's go to the summary. So all I've been sharing with you are the facts of Alibaba. Okay. So let's go through this together again. For the China business, it's proven already, all right, that Pinduoduo, Douyin, and Kuaishou, these three e-commerce companies are growing very fast and they are taking market share from both Alibaba and JD.com. So Alibaba must be wary of these three companies. Then for the China business, we must monitor Alibaba's market share, okay, and the revenue growth. Make sure the market share either stays stagnant the same, and then the revenue get to re-accelerate. The Taobao and Tmall in China must also re-accelerate their growth in order for the share price to go up. Okay. As for the international business, very large market, a lot of potential under-penetrated, but they must also be wary of Shopee, Tokopedia, TikTok, and one company called Temu. And let me tell you this, Temu is a company by Pinduoduo. So judging, from the performance of Pinduoduo in China, right, they have been grabbing market share so fast. Temu is a contender to really take note on. They just started, all right, in Southeast Asia. Yeah. So I'm very sure some of you will see ads by Temu a lot. Yeah. So competition is going to be intense. Yeah. I don't care whether you are Alibaba shareholder or C Limited shareholder. Temu is a company that all of us need to be wary of because it's been supported by Pinduoduo. You can just copy paste their strategy. Okay, their strategy, and it has been given them a huge success in China. So let's see how they will perform in Southeast Asia. Okay. And not only that, the international business, AIDC and China must maintain their high growth rate because this will be the main revenue contributor for Alibaba for their overall revenue growth. Currently, right now, each of AIDC and China is contribute around 10% only. Okay, each 10%, that means in total is 20% of the total revenue. So in order to contribute significantly, they must continue to maintain their growth rate until they grow to a volume that is big enough to move the needle for Alibaba's revenue. Okay, so this is the summary and these are the facts I have for you guys. Okay, for those who are interested to invest in Alibaba or the Alibaba shareholders. All right, if you have any questions or comments about Alibaba, do drop your comment down below and I'll do my best to reply you guys. So thanks for watching and looking forward to share my next video with you guys. Thank you.